Good morning, everybody. Happy Monday. It is a glorious day. The weather this weekend was awesome. Not too much wind and got a little warm yesterday, but it was beautiful. Another sunny day in beautiful Las Vegas. And my husband always says another day in paradise. So however you look at it, here we are. Let's see. Wow, what news today? We have 31 days of available inventory. What is going on? We listed 131 homes over the weekend, and on Friday we had 191 closings. My goodness, the numbers, they're different. They're trending in a different direction. Of those listings, the 131 listings, 33 were single-family homes, 475,000 or under, for a total now of 795 homes. Oh dear, am I not connected? I'm sure you all can still hear me, hopefully. Let's see. Let me check. I know, I have to tell you, it's been a day and a half so far. I'm sure you all know how that goes. Let's see here, make sure. Come on. We don't have time to mess around here. We got things to talk about. Okay. Let's see. Can you hear me? I know. Okay. All right, you can. That's good. Sorry about that. I know they say, oh, don't do that, but I have to because I want you to hear me. Hi, everybody. Thanks for joining me this morning. 31 days of inventory. Now, we are selling year to date 124 homes a day. This month, we're selling 111 homes a day. So we're trending down on the number of sales per day, but we shall see. You know, it tends to change toward the end of the month. I started putting in the month to date for last year, and I moved the year to date down here. So last year in May, we were selling 137 homes a day, or no, year to date, I'm sorry. Year to date, January through May 16th, we were selling 137 homes per day. That's 14 more than we're selling this year to date. So, of course, we had the pandemic and all those built up buyers. So I'm not surprised. And I'm happy, actually, that it's that low. So anyway, it's all good. It's all good stuff. The $1 million homes, 5.5 a day, flying off the shelf. There's 630 available. That number keeps creeping up, which means more and more $1 million plus home sellers are putting their houses on the market to sell. And they're selling faster than ever. True story. Let's see. I think that's all for remarkable about our market. I did want to show you this, which is last year. This is May of 2021. A little bit different market, but I wanted just to bring the attention to the inventory. We had about, 0.6 times 3. Where's Jimmy? He always helps me with that. 18 days. So last year our inventory was a lot lower, and now we're trending up as far as days of inventory. And I'm sure that there's some reasons for that, and we'll get into that in a second here. Okay, let's look at this. So today, for the second part of the show, I want to talk about the first rule of housing bubbles is don't talk about them. And that's what an economist warned. And this economist is a senior at Zillow. A Zillow senior economist, Jeff Tucker, is skeptical that a housing bubble is looming, but he worries such talk could hurt future buyers in need of home builders to continue producing new inventory. Wow. That's quite a statement, don't you think? I'm gonna share the article with you, and I made it so we could look at it together on the screen, because I really don't think there's the housing there. I think there's going to be a correction. I don't know if Tucker is saying this because of sensationalism, but let's just see what he has to say, everybody. Okay, let's hang in here. What started out as a rather staid academic exercise ended up turning heads across the real estate industry with its rather bold conclusion. We could be in the early stages of fueling a new housing bubble. A team of researchers working with the Federal Reserve Bank of Dallas proposed a little over a month ago. And according to their telling, ballooning home price growth may have been spurred in part by a shared belief among buyers that prices would only continue to go up regardless of the rental income those properties could produce, or other key economic indicators. Since late March, many in the real estate industry have discussed the report, but not everyone is buying it. And Jeff Tucker, the senior economist for Zillow, is one of the skeptics. And it's good to hear what the skeptics have to say, because we may have other skeptics out there in the marketplace, and we need to understand how we're going to address the skepticism. The market is reaching an inflection point as dynamics start to shift away from heavily favored sellers, he wrote. But Tucker doesn't expect that shift to result in widespread home price reductions. For one thing, demand for homes is likely to be more resilient than the Fed researchers accounted for, and he argued that. So let's see as he goes on. Let's see here. The next slide is going to say, that's not it, hang on, get it. Come on, work with me here. We're looking for, if prices did begin to fall, we know there are millions of stymied first-time homebuyers or younger millennials soon to be aging into that situation. Not soon to be, they're there, Tucker, I hate to tell you. Waiting in the wings to snap up homes if they see a bargain. Instead, Tucker worries that talk of a bubble could actually hurt future buyers who need home builders to continue producing new inventory. Now that I will agree with. I think that the talk of a bubble, for what he says, could hurt future buyers who need home builders to continue producing new inventory. Now, I agree with the statement, but I disagree that the home builders would stop producing inventory when there's such a demand. And all the chief economists, like the chief economists of NAR and other chief economists, will tell you that we can't build new homes fast enough. And now Jimmy, if Jimmy were here, I think that he would chime in and say, yeah, but Ruthie, labor's going up, lumber's going up, land is going up. So the prices are going to continue to go up. And as long as you have, now there's been times in Las Vegas in our real estate history where there has been a pretty big gap, almost $100,000 gap between resale homes and new homes, but it didn't stop people from buying new homes. So you got to take that into consideration. He's saying builders are juggling more active projects than they have since before the Great Recession. That's true. This means they would be at risk of losing a lot of money if there were a potential downturn in prices, Tucker said in the report. But I just told you, everybody, that we've had a big gap in Las Vegas. So Las Vegas may be just one of those little different markets. And I've always said we are a different market. And this may be another facet of the different market that we're in. He says if they trim their construction plans out of caution, we will miss out on one of the best hopes we have for net new inventory on the market, and the inventory crunch that's helped push prices up will persist for longer than expected. Now, he says this, and I don't think it makes sense what he's saying. If they trim their construction plans out of caution, they're not going to do that. We will miss out on one of the best hopes we have for net new inventory on the market, and the inventory crunch that's helped push prices up will persist for longer than expected. Well, he's putting a lot into that sentence, and he's not explaining it very well, in my opinion. But let's keep going. Another consideration, since the period that the Fed researchers studied, rent growth has accelerated throughout much of the country. Well, yes, it has. And rents are now up 17% over the past year, Tucker said. And with consumers facing their highest price inflation in 4 decades, more Americans are likely to turn to real estate as a way of protecting their savings. Let's read that one again. Rents are up 17% over the past year, Tucker said. And with consumers facing their highest price inflation in 4 decades, more Americans are likely to turn to real estate as a way of protecting their savings. Okay, now let me look at the next page, because what he's not saying, now I know that Tucker's, a brilliant economist, but what he's not saying here is more Americans, let me tell you, more hedge funds, more corporate investors. They're looking for a way to increase their bottom line because of the rents. And they're hoping that the prices don't correct too much if they start buying. And they have a certain criteria that they're using to make those purchases and to ensure that they don't disappoint their investors. So let's keep going here. So looking ahead, hold on, let's see. Yeah, looking ahead, Tucker thinks a turnaround in America's slimmed out home inventory could well be underway. Looking ahead, he thinks that a turnaround in America's slimmed out home inventory could be well underway. And now what's happening in Vegas? Our inventory is going up, right? We have more days of inventory than we've had all year, and that's today. So throughout every month of the pandemic, the number of active homes for sale has been lower than it was the same. Yeah, I showed you, last year we had less homes on the market, or they were selling faster, however you want to look at it. But based on recent months' activity, Tucker thinks the market could be poised to see a year-over-year inventory growth before the end of 2022. Well, 2020, yeah, we just saw that. This would be a sign of better conditions for buyers, since improved inventory could be a barometer of a warning advantage that sellers have over their eager counterparts. More inventory is both the consequence and the cause of a more balanced housing market. It gives home shoppers more options to choose from, right? Limiting the number of buyers bidding on each home. That's always good, right? That's really good if you're a real estate agent in Las Vegas. And it lights a competitive fire under sellers and their listing agents to make their homes shine, and be wary of overpricing. Now that I agree with. Still, the full recovery to pre-pandemic conditions is expected to take years, not months. Okay, and he doesn't explain that very well. If inventory continues to recover as quickly as it did in March, it would still take until September of 2024 to reach the levels observed in 2019. And 2019 is before the pandemic. So he's just basically saying that it's going to take a long time to get back to where we were. The Fed researchers were careful to mention in their report that they didn't think a bubble would bring about the same devastating effects on the global financial system as we saw in 2007. Of course not. It's a totally different, we have a totally different, our criteria. We have more people that have more equity in their homes than ever before. And even if there's a slight correction, that's not going to decrease the equity to a great degree. And they are living in a price, people are living in the payment, not the price. So yeah, this is a totally different market. Today's buyer remain in better financial shape. Yes, they do, and are less resilient on debt for their home purchases. We reported many times that, right now Americans have more in their savings than they've ever did. So, even if you're an investor, a single investor, just have a couple homes that you're investing in, and they would sit vacant, which they wouldn't. You would have savings to pay the mortgage anyway. Policymakers can also use the last crisis as a guide for acting early, preventing the worst potential outcomes of a future drop in home prices. The prices are going to eventually, they're going to soften. That's my opinion. But there's no doubt that newly purchased homes have been growing less affordable by the day. Mortgage rates are up and home prices are continuing to rise alongside them at a speed with which wage growth hasn't kept pace. Well, first of all, inflation is something that it goes up, it goes down, it stays static for a while. And I think that eventually the inflation is going to start going down a little bit. I think it actually did go down a couple tenths of a point. And the mortgage rates are up. Yeah, but that's the same thing. Mortgage rates go up and down. So I think that, people say these things as if this is forever, right? No, it's not forever. And there's so many different things going on right now that I think that I don't think anybody can really predict with any type of accuracy what's going to happen. Fortunately for current homeowners, most of them are protected from the effects of future rate increases. So he also says most existing homeowners are insulated from high mortgage rates thanks to more than 90% of loans in the past several years being vanilla fixed rate, fully amortizing mortgages. That keeps people's current bills affordable and will prevent a foreclosure wave like the one that helped cause the housing market to spin out of control. Absolutely. Absolutely. So when you think of that, how many people actually refinanced their homes? I mean, it was amazing. It was just amazing how many people refinanced. And so again, people live in the payment. They live in the payment and now they have equity. So if I'm living in this payment, of $1,500, $1,600 a month, and today it might be $2,200 if I just bought that home today, but I didn't. And I have refinanced it when the rates were low. And so let's say, I don't think I have my chart here handy, but let's say that my equity is $100,000 based on a price of $475. Okay, that means I bought my home last year, right? And so whether I refinanced it or whether I just bought it last year, I mean, people have at least that much equity because of the increase in price. So anyway, it's not going to happen. It's just, but there is going to be a price correction. I keep saying that because I really believe it. And that's it for me today. I hope everybody had a wonderful weekend. It's going to be a beautiful week. And stay happy, be happy. We have a class today on agency, and it's really a great class. And Jimmy, of course, is such a great instructor. Let's see, where's my, here's what I wanted to show you. Just let me backtrack just for a second. Yeah, we did this at $475. So like if people bought pre-pandemic, lose my voice. In 2019, the average price was $312. They have $162,000 in equity, and they probably refinanced, so they're not going anywhere. Even in 2021, let's see here, 2021, if they bought the house last year, like I was saying, they have about $110,000 in equity if they bought, based on this particular, the median price. And then this year, if they bought in January and the interest rate was still good then, they still have equity. So this is the major argument that we're not going to have a bubble, right? So if I bought my house in January, and let's say that the correction would be back to $425, I'm still happy, right? I got a great interest rate, and over time, my price will go back up again. Prices always do. So I think we're in good shape, everybody. Not to worry. And we'll weather through whatever happens, especially because we're living in the payment, not the price, and people have equity. So um, good news for everybody. If you are a millennial, if you are a first-time home buyer, try to figure out how you can buy a home. Get a gift from somebody, your parents, right? Or a friend or something. Don't miss this opportunity to become a homeowner just because, you're unsure of whether the prices are going to go down and you might get a better deal. They're going to go back up anyway. So buy real estate and wait. Don't wait to buy real estate. I wanted to say that. And then let's just take a brief look here at Jimmy's class today. Let me go get you something to look at here. Hang on, everybody. Ta-da. Let's see. It's agency, and I just want to agency. Here we go. Let's look at this little boy. He's telling us all the details. Okay, here we go. This down. It's an agency class, and you're going to, it's 2 to 5 today. I had to make sure I knew what time it was, 2 to 5. I will be there, Jimmy will be there, and hopefully you'll go to bee.vegas and sign up, bee.vegas and sign up. I didn't have time today to make my little, yeah. Okay, let me do this real quick. Update this and show this. Jimmy Dague. So check out all the classes at www.be.vegas. Click on today's class. Sign up. It's 2 to 5, so you've got some time. You can sign up at 5 till 2 and still be good. We Zoom, which still counts for live credits, and we have a beautiful classroom, and we always have food and beverages for people who come to the classroom. Anyway, love you all. Have a great Monday.